economy is crashing at high speed. So this is the first emergency broadcast we're going to do, but this is what our company was set up to do.
Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
What was she saying that terrified you?
What Janet Yellen was saying, we all left Monday thinking that, hey, it's okay. The banks are going to be bailed out, and it won't be at the taxpayers' expense, which we all knew was a lie. It would be at your dollar's expense or your deposits' expense, in the respect that the money had to be created out of thin air, and we just figured that would mean more inflation. And so all of the banks, regardless of their poor choices, their gambling, if you will, in depositors' assets, and we'll talk about that in a moment, that they'd be bailed out, and that this would just be an ever-increasing party of printing and of backstopping the banks. And what she said yesterday was truly shocking to me. Well, basically what she said was that the only banks that will be bailed out will be those banks that have the approval of the majority of the FDIC board, the majority of the Federal Reserve Board, and Janet Yellen herself. Those are the only ones that will be bailed out. In other words, those banks, she said, that in our minds are too big to fail, the systemically too big to fail banks. In essence, what she was saying was that all of those smaller banks are dead on arrival. They won't be bailed out. And if they're not deemed to be systemically important, then they will have no backstopping. And what that is basically doing is herding everyone into a pen of the 4, 5, 6 biggest commercial banks in the world, or in the United States, the Wells Fargos, the Bank of America, the Citi, the JP, the Goldman. All of them are going to be too big to fail, systemically too big to fail, interconnected with one another through a massive, massive amount of derivatives, whereby if they fail, they'll bring down the whole system. But the little banks who run into trouble, and we're going to talk about why they run into trouble in a moment, but those banks, no, they won't be bailed out, and too bad. And what that's going to do is collapse the entire small banking industry. The entire regional bank industry is going to collapse. The problem is all of those bonds have an average maturity or an average yield rather of about 2 to 2.5% and long maturities. And so the problem is that since interest rates have risen closer to 5%, every one of those bonds in their portfolio have lost 50% or more of their value. Now, the banking regulations say that they don't have to mark those to market until they sell them. And so they have a whole balance sheet filled with toxic assets that have lost over half their value or more. So in the case of SVC, when you saw a run on the bank, for whatever reason, you get people running on the bank because there's so little cash, the reserve requirements have been slashed to nothing. These banks are forced to sell their bonds at a huge loss in order to meet customer demands to get their money back. And if enough people redeem or withdraw their money, and the banks are forced to liquidate their bond holdings, which have been eviscerated by rising rates, then as we saw last week, a large bank can become insolvent in less than 24 hours. And that's exactly what happened. The FDIC can't handle this. Their insurance fund is only 0.03% of bank deposits. 0.03%, roughly $125 billion in FDIC liquidity backing over $9.5 trillion in deposits.
How many employees lose their jobs?
A lot of employees. And more than that, how many people are going to lose their money? So all I can simply say to you is this: the banks are in trouble. We're going to increase the tremendous amount of inflation that's already into the system. We're going to increase it to bail out those banks that are systemically too big to fail. And they've already told us it won't be via taxpayer injections or bailouts. They've told us that FDIC only has 0.03% backing, so that won't work. So they'll print money to bail those banks out. But everyone's going to flood into the commercial banks. And then they are ripe for whatever they have in mind. If they let one of them fail, just one, everyone will panic and embrace the new CBDC currency, which we have been told by the Bank of International Settlements that everyone must have. All countries that are part of that network, the BIS network, has to have an operational CBDC by 2025. Who knows? Maybe we'll have one much sooner than that, the way that this is all going, but this is very frightening. So their agenda from the Federal Reserve is to be able to enact monetary policy without having to it to be lent into existence, as has been the entire history of this country, by the banking system. They want to be able to give you money or take you money to create inflation or deflation if things get too hot or not hot enough. The IRS and the government has a different agenda. It is coming. We were told that every country will have one by 2025. You know, the 13 or 14 banks, as per President Biden's executive order, have been working on it, along with MasterCard and maybe another credit card company, where they have been mirroring the system. All the deposits and deposits and outgoing money has been mirrored on a system that hasn't been turned on yet, to see that it's working. And it's coming. I want to just say one last thing. I know we want to keep this short. What we are seeing now are people motivated by tremendous concern and fear, and it is oozing from these people. And I think for the very first time in my career, not only are all the people I'm talking to afraid and concerned, I am. I emptied my own personal bank out of U.S. Bank the other day on Sunday before they came out and rewrote the rules, because I'm very, very, very concerned about where this is leading. And I think it's just the beginning, Robert. I truly believe it's just the beginning. And you're right. They have lost all credibility. First, they told us there was no inflation, and then inflation is transitory. Then they'll stop inflation, and then inflation peaked, and then it reared its head again. And the time to be scared is when they tell us, don't worry, we've got all this covered. That's the time to be scared. And I think that people need to really reassess where their funds are right now. And I hate to incite anyone to pull money out of a small regional bank and create these runs on the bank, but you got to wonder, when Treasury Secretary Yellen says we will choose only to stop the banks or backstop the banks that are systemically important, the rest will let fail, this is a problem waiting to happen, especially as inflation goes higher, and the byproduct of that is rising interest rates, which further deteriorates the balance sheet of all of these banks that are loaded up on toxic treasuries and toxic mortgage-backed securities.